Hello and welcome to a quick overview of the global markets, section 1. So first, let's start by looking at Japan and the Nikkei index. Our bottom line is that prices are completing a complex correction for intermediate wave 2 that should give way to a strong move higher in a third impulse wave into the new year. We view wave 2 as a double tree combination with a triangle in the wave Y position. Ideally, we will see a low and a bullish reversal early next month. A key resistance level to watch is 30698, the wave 1 high. Although we don't expect it to break on the first attempt, a solid break above this level would confirm wave 3 of 3 is in its early stages. A reasonable upside target to note is the 1.618 multiple at 44130. Okay, so next up on our list is the Stocks 50 index, which basically represents the performance of the Eurozone. Here, we are assuming that prices have completed a bullish triangle fourth wave, which is now being followed by a rally in wave 5 of 1. Within wave 5, prices are correcting in a small second wave. Channel support is located at 4142. So we look for a demand near this level and ideally a bullish reversal in wave 3 of 5. A reasonable upside target to note is the 0.786 retracement of the entire wave 4. Near this level, we look for a temporary high and a corrective reversal in wave 2. However, this will likely be a story for the second quarter of the new year. Next up is China. We expect the 62% retracement of intermediate wave 1 to remain a strong short term support. We are assuming that wave 2 is either complete or in its very late stages. So in Q1, we are on the lookout for a turn higher in wave 3 in blue. A key level to note is 18551. A break above this level confirms a three wave decline from the wave 1 high and hence wave 3 up is in its early stages. Wave 3 would achieve a typical 1.618 multiple of wave 1 at 29399. Now let's continue with the UK. So here we are tracking a developing rally in minor wave 3. Near-term support should be found near 7404, the prior highs. A reasonable short-term target is the 1.618 multiple of wave 1 at 8071. Once this level is reached, we will begin to watch for a temporary high and a corrective pullback in wave 4. Above this level, the next key level to note is 8400, which is a channel resistance. Now let's jump to the Netherlands. So prices here have registered a temporary high from which a downside correction in intermediate wave 4 is now in play. It would retrace a typical 38.2% of wave 3 at 7 1 6. Ideally, wave 4 would take shape of a triangle ahead of the next rally in wave 5 of 3. Next up is France. So here we assume that a post-triangle thrust is underway in wave 5 of 3. A reasonable target for Q1 is 7719, where wave 5 would achieve equality with wave 1. Once this level is reached, we will begin to watch for a temporary high and a corrective downside reversal in wave 4 as outlined on the chart. Support should be found into the price territory of the prior fourth wave, specifically between 6737 and 6409. And now let's continue with Germany and the DAX. Our working assumption is that prices are currently completing an initial 5 waves up for wave 1 of 3. Look for wave 1 to terminate near 17231. Near this level, we look for a downside correction in minor wave 2 that should revisit the price territory of the prior fourth wave ahead of the next rally in wave 3, specifically the range lows of the triangle within wave 1. And finally, let's take a look at Italy. So here we are favoring the early stages of intermediate wave 3. The wave 1 high, which is old resistance, is now acting as support on pullbacks. Look for wave 3 to achieve a typical 1.618 multiple of wave 1 at 35372. A solid break above this level, however, unlocks greater upside potential in wave 3 towards the 2.618 multiple of wave 1. However, this could be a story for year end. This concludes our wrap up for the first section of the global markets. Stay tuned for the second part.